So if you're like me, you might be trying to make sense this morning out of how the market is up. Bonds are actually slightly down after a PCE report that came in as expected, but hotter than the Fed would want, basically absolutely eliminating any chance that there's going to be a cut in March, probably in April too. But the markets are okay. They're good. They're in the green across the board. And then, of course, there's this business with tariffs being imposed on Canada and Mexico at the 25% level, which may or may not include oil, and oil prices are down. I'm still a little bit confused. So I've tried my best, as the analyst that I claim to be, and some of you might actually think that I'm okay at doing that. I don't know. Let me know in the comments below how you feel about that. But anyway, I can only think of one thing. This is another Trump bump. This is a Trump bump because why? Because Trump is doing what he promised to do, because we are seeing DOGE do what it promised to do. And so the tariffs are just part of that picture. The tariffs that he's threatening around the world, 100% tariffs to make sure that these BRIC countries don't go off the dollar and encourage another bunch of companies to join them in going off the dollar. Threats, threats, threats. Well, okay, threats. But the United States is the most powerful country and has by far the most powerful economy in the world. And so you can use your position of power to not have other countries doing things that are going to disrupt or hurt this country. So I think people are going, hey, go Trump. I don't know. What do you think? I'd love to know what you think about this. Now, then we turn our attention to Tesla. And Tesla is now trading at about 415 last time I checked, which would be just slightly above my expectation for the Friday and or Monday after earnings call. I said, 410 to 414. And so we're slightly above that. And with a little luck, it'll just keep going up and we'll get to Brian Wang's number of 450. Brian, I'm counting on you, buddy. I'd much rather be at 450 than 415. But I'm going to take the win if I get the win, of course. But why is Tesla all of a sudden at the number I thought it was going to be? Well, a whole bunch of folks have increased their price targets and have said lovely things about the new Tesla, about the new story, about the new narrative, which I've been talking about now for months and months and months. And every time I see a narrative shift, I talk to you about the narrative shift. And usually I'm talking about the narrative shift before anybody else is talking about their narrative shift. But I talked about this one months and months ago. Now, finally, the street is saying, oh, gosh, look here. We have a different kind of company that's based on a different platform and different products. And the future is looking pretty good. All right. So AJ says this. He says, yes, 2025 is exposed to risks. So he's talking about Tesla, exposed to risks due to the high implied multiple in the 400 range. It'll be a higher multiple when we hit 500 in a few weeks. He says, initial robotaxi financial impact likely immaterial into at least the fourth quarter. I would agree with that. It's going to be very small numbers, probably even to the end of the year. It might show up in FSD uptake. We might start to see some pretty significant numbers in FSD uptake if Europe and China both approve FSD, as well as if we go to unsupervised in the US. All of those will have huge impacts on FSD uptake, which could really impact the bottom line. Nobody's talking about that, except who? Have you seen anybody else talking about that? No, only me. This FSD uptake thing is going to be a big deal. Number three, new vehicles financially likely immaterial until the fourth quarter. Well, does he mean the new? I don't necessarily agree here. I'm not sure what he means by new vehicles. If he means the Juniper, the Juniper is going to have an impact in the second quarter. That's for sure. The question will be, can they catch up? And I think they can and pass last year's sales of Model Y, given that there will be a pretty dramatic miss in the first quarter compared to last year. Can they catch up later in the year? And I think they can. That's my opinion. Now then, you're going to add these new vehicles, whatever they are, the Model Q vehicles, plural. Who said that first? Oh, now you're seeing at least a couple. Stephen Mark Ryan said it in his program last night. I've seen a couple of other people, but I think you heard it here first because I picked it up on the call and nobody else did. In fact, I wasn't even sure. I had to go back and look and look and look. I finally found it. Okay, so we've got vehicles coming and those will start producing in the first half, and material impact, yes, fourth quarter, I would think would be about right. Number four, first quarter 2025 with elevated risks because of ramping of 3 factories and associated and inbound, outbound logistics. Yeah, it's going to have an impact in the first quarter, no doubt about it. I need to really think it through. I think we'll see a very nice impact from increasing energy sales. Again, I need to really get it all together. I haven't done that yet. All right. And then Trump killing the credits possible in 2025 is a problem. I don't think that's going to happen in 2025. All right. So big picture, you need to survive H1 and H2. Oh, you need to survive H1, and then H2 should start with rewards. The positives during the call were enough for Truist securities. This is a change in subject. Somehow I didn't make that mark. The positives during the call were enough for Truist Securities analyst William Stein to raise his company price target to 373 from 351. However, Stein's note to investors showed there was something to be desired despite all the good that was revealed during the call. Stein said there was not enough ground truth during the call and too much of a focus on cheerleading of the company's potential releases this year. In the history of the world, Mr. Stein, there has never been nothing like what the cheerleading is talking about. So I think you should be talking about that. And I think it overwhelms any conversation of what happened in the fourth quarter. He says too much cheerleading, not enough ground truth. Results for the 4,024 were missed, even ignoring the 17 cents a share EPS benefit on the change in Bitcoin accounting. He wrote the deliveries guide was moderated. Yeah, so he just goes on and on with all this negative stuff. Never mind. All right, Cantech. Craig Irwin of Roth Capital, a persistent bear who has changed his mind and has come over to the positive side. This analyst thinks Tesla will post non-GAAP EPS of $265 in 2025 on revenue of 110.6. I think the revenue will be much higher than that. EPS will be much higher than this, but it won't still be the crazy numbers that are coming in 2026. We increase our target to 450 from 380, it's almost there, moving to 14 times revenue multiple on 2025 estimates. Irwin explained Tesla's a large cap company where the stock is behaving like an emerging growth company. Catalysts will play a primary role in valuation. In our opinion, by the way, I've always liked Craig Irwin's analyses, even if I didn't like his results. We see abundant positive catalysts and now a dearth of negative catalysts, so we would be buyers on any weakness. CFRA senior analyst Garrett Nelson raises his price target from 380 to 450 and continues his buy recommendation. Well, maybe these 3 analysts all raising their recommendations and their price targets might have something to do with the price of Tesla's up this morning. All right. Now, here's a comment, analysis that I've been working on for a couple of days. This is my one of the things that comes out of the call. Battery packs are the issue. Does this mean that batteries are the issue? He said battery packs. I'm going to assume for now that he meant batteries and then battery packs. All right. If that's true, here are my questions. Which batteries are holding up sales? Number 2, which products are not being shipped because of a shortage? In other words, which ones are being held up or could sell more or are not being promoted? What's happening? How's it impacted? Which specifically? How long has this been an issue? Has it been an issue all of 2024, half of 2024? Why is this the first time you're having a meeting? Or why is it the first time you're telling us about it? Why was there a meeting the day of the conference call? Has it become something? Has there something that's changed that made it necessary to have a meeting? I think that should have been revealed. Number 4, in a world where we're told that CATL is operating at well below capacity, why is there any shortage? We're hearing they're running at like 60% of capacity. Why can't they just increase their sales and shipments? Number five, is this tied to IRA issues? In other words, is there situations where you could sell more Model 3s if you had more batteries, but and you have the batteries, but they don't qualify is regulation or these government subsidies actually hurting our ability to be flexible? Number six, what is the status of the Panasonic 4680s in Japan? What's the status of new Panasonic US factory? I think it's in Wichita. What about the 40 gigawatts of production equipment Tesla bought from CATL? Is that coming on stream? Is it close? And what about other suppliers that are starting new plants in the United States? And what about South Korea? There's supposed to be, plenty of new product coming out of Samsung. Yeah, I mean, what about all these other suppliers? And then seven, what is happening with the production of 4680 in Austin? That we're sitting at 16 gigawatt hours annualized, which is supposed to be a 200 gigawatt line, or two lines adding up to 200 gigawatts. Please explain what's holding up that capacity, how much the lower production is contributing to the problem that you're currently having, and update us as soon as you can on what some of the solutions are. I'm sure you'll come up with the right solutions, Elon. I trust you on that. And why didn't any analyst ask these questions? Why have no analysts been asking the question over the last 2 days? I've read every article. I've read hundreds of headlines. I've read all kinds of stuff on X. The batteries are core. I mean, why isn't this being asked? Why am I the first one to have these questions? All right, Tip Rank says, this is from Mizuho Securities Analyst VJ Rakesh, reiterates his buy rating on Tesla. Despite a disappointing performance, Rakesh also maintained his price target of 515, so no increase there, but says he's still a buy. From the NASDAQ, for the current fiscal year ending in December, analysts expect Tesla's EPS to grow 41% year over year. Well, if that happens, that's back to being a growth company, right? I mean, it's almost 50%. So therefore, your PE of 50 would be justified, and then the rest of it would be the story. The company's earnings surprise history is mixed. It beat or matched the consensus estimate 2 of the last 4 quarters, while missing on 2 other occasions. Among the 38 analysts covering the stock, the consensus rating is now a hold. That's based on 12 strong buy ratings, 2 moderate buys, 14 holds, and 10 strong sells, pretty balanced. This configuration is more bullish than 3 months ago when the stock had only 10 strong buy ratings. On January 28, Jefferies analyst Philippe Houchois, I have no idea, maintained a hold rating on Tesla stock price target of 300. All right, and then finally on the Tesla side of the news, Rains comes in. He says 100 safer than human FSD does not differ very much from 1,000 times safer than human FSD, especially since passengers have no benchmark or metrics to evaluate a driving intelligence that is beyond their comprehension. The return on making it 10,000 times safer than humans would diminish even further, eventually converging once there's no more fatalities at all from car accidents. Ultimately, with enough compute, and as all the secret recipes become common knowledge, there will be no competitive difference in driving safety or efficiency among the top players sometime far into the future. On the other hand, non-verifiable and non-measurable alignment problems such as morals and ethics, etiquette and empathy, personalization and preference, as well as culture and values will become the ultimate differentiators in user experience. These factors are data constrained rather than compute constrained. Moreover, such data constraints cannot be solved with purely synthetic data. Owning large-scale, private, real-world, diversified data is essential, and this may be the long-term moat for Tesla's robotaxi. Unless someone else builds a larger human fleet, no one will ever catch up, and if they want to give it a try, they have to be quick. Once FD replaces all human drivers, their opportunity will be gone forever. Think about that one. Future customers might think Waymo is just as safe as Cybercab, but their smoothness and comfort will be worlds apart. By the way, that made me think this thought, and tell me what you think about this thought. Waymo probably is sitting there in the back of their head going, okay, if Tesla turns out to be right, we can just start buying up used Teslas. and replace them in the fleet. We'll have our information, we'll have our knowledge, we'll have some what do you call it, brand identification. Anyway, we'll see. By the way, this is Randy Kirk. You know what to do. I'm not going to tell you today. Just do it. Yeah. Okay. And then coming up later today, we will have Larry Goldberg at roughly, it could be 5 o'clock, probably earlier on Friday. And then Phil Beisle will be here again. He has got so many cool things to talk about that nobody else is talking about because Phil has special knowledge from his days when he was at Rivian and his continued study since he's left Rivian. Brian Wang and Robert Scobel will both be joining me over the weekend, so be here over the weekend as well. I can guarantee you both Brian and Robert have some amazing stuff to talk about because I know what they're going to talk about. All right, and then join. Okay. CNBC has this morning. The personal consumption expenditures price index increased by 2.6 on a year-over-year basis. That is 0.2% percentage points higher than the November reading, in line, however, with the Dow Jones estimate. So great, it's in line with the Dow Jones estimate, but it's not in line with who? The Fed. Not happy. Excluding food and energy, core PCE registered a 2.8 reading that also met expectations and was the same as November, which is way too high for the Fed. Though the Fed considers both readings historically, officials have been seen the core as a better gauge on long-run inflation. On a monthly basis, headline PCE rose 0.3, while core increased 0.2, which were both in line with forecasts and too high. The Fed targets annual inflation at 2%, a level the price gauge has not seen since February of 2021. Yeah, just shortly after we lost the best president the U.S. is. Okay. The report comes 2 days after the central bank voted unanimously to hold its key interest rate, taking a break at the same 4.2 to 4.5. In remarks delivered Friday morning, Fed Governor Michelle Bowman said she expects inflation to decelerate through 2025, but thinks the central bank should stay on hold until there are clear signs that this is happening. And why do you think that they will decelerate, Governor Michelle Bowman? Why don't you just say it? Because of what Trump is doing and what DOGE is doing. That's the only thing. Productivity, yes, productivity by itself, regardless of what the government does, productivity can cause more deflation, real deflation. But faster, quicker would be reducing the deficit. There's still more work to be done as inflation gets closer to our 2% goal, she said. I would like to see progress in lowering inflation resume before we make further adjustments. I do expect that inflation will begin to decline. She said that already. They repeated themselves. The report Friday also showed personal income increased 0.4%. Personal income up 0.4%. That's 5% per year, while spending rose 0.7%, which was above estimates. Where are you people getting the money to spend? Oh, yeah, you made all this money in the stock market and on your home? Oh, that's how you have money to spend. All right, and by the way, that's true. I'm not making that up. I'm not being flip. That is actually what's happening. People are dipping into what they've made in these asset appreciations and taking trips and having a great time. All right, personal income increased $92 billion. That is a 0.4% at a monthly rate in December, according to estimates released by the U.S. Bureau of Economic Analysis. Disposable personal income, less personal current taxes, increased $79.7 billion or 0.4%, and personal consumption expenditures increased 133.7%. So that's really good. All right, pending home sales retracted 5.5% in December. Oh, no. You mean they sold less in December than they did in November? Oh, that was following 4 consecutive months of increases, and it's off season, and December is always the worst month. According to the National, they didn't say that. I'm saying that. All 4 U.S. regions experienced month-over-month losses in transactions, while the most significant fell in the West, et cetera, et cetera. By the way, I checked my 3 homes in California, and all 3 homes are doing just fine. The pricing is staying just fine. The pending home sales index, a forward-looking indicator of home sales based on contract signings, slid 5.5 in December. Year over year, pending transactions declined 5%. Anyway, all of that is a 1 month thing after 4 straight months of gains, but it is not entirely surprising, said Lawrence Yan. Economic data never moves in a straight line. High mortgage rates have not significantly dented housing demand due to greater numbers of cash transactions. Oh, yeah, that too. Where are those markets now, you ask me? Let me go and check out where the markets are now. Well, let's start with Tesla, who's up $14.22 at $414.50. Now, who would have guessed that Tesla would be at 414 right now on Friday? I think it'll still be around 410 to 414 on Monday. I think it's stretched as far as it's going. Well, now, will it go up and down intraday? Sure. But I think at the close on Monday, it'll be 410 to 414. Yeah. Hey, listen, don't you think I've already won? I think I've already won this deal, right? But there's still time, Brian. You can still win this at 450. All right. Dow Jones up 73, NASDAQ up 251, S&P up 41.92. We have got every single one of the Magnificent Seven up, with Apple looking good after its earnings yesterday. We have got Meta up 2%. We have got NVIDIA is up after being down earlier this morning. You've got all the Cathie Woods up. Basically, again, TDOC is down 12 cents, but that's not really significant. Everything else is kind of like this on the Cathie Wood list. Yeah, so it's looking good this morning. Percentage-wise, that is Dow up 0.15%, NASDAQ up 1.27%, S&P up 0.69%, and Tesla up only 3.63%. Yeah, okay, let's go ahead and check what's shockingly happening, at least it was last time I checked, to the bonds. Okay, let's take a look here. Okay, nope, they've reversed again. But okay, the bonds surprisingly are holding up. So they were actually down a little bit a few minutes ago. I'm talking about the 10-year yield was down. It's up 0.4 of a basis point. I mean, this was not a good reading, and it definitely. I don't think there's any chance. I agree with. Who was it that said that? Was it somebody? One of my co-hosts said the other day, no chance. That might have been Nicholas. Said no. The Fed is not going to make any reductions until June or maybe even later. I think there's a chance of that unless the DOGE and the federal government and the Republican Congress all show that they're serious and we really get to see actual stuff taking place. And I think that's happening. We'll find out. The bond market, I think, is saying that they're starting to believe it. Okay, that's why it's pretty flat this morning. I mean, up 0.4 this morning after that PCE print. No, that's flat. Okay, 2-year up 0.6%, and the 1 month up 1.3%. Again, the shorts seem to be a little weaker than the longs right now in terms of the bond purchases. Okay, let's go ahead to oil, which was down earlier significantly. Let's see if that stayed down. It is still down, but not as significantly. So down 41 cents on Texas Intermediate, only 16 cents on Brent, and there is still more than a $4 difference. I think the reason right now, my best guess is that the stuff that we're doing in the United States in order to bring the price of oil down is not as impactful as it is on Europe. It's more impactful in the United States. So I think that's what's happening because there's no, the Middle East is not embroiled right now. So having a $4 difference is probably more about us than them. Okay. But 72.34 still heading towards the 60s, which I think we will hit shortly. Natural gas just continuing to plummet, down 1% this morning at $3 and change, $3.01. So we're very close to going into the twos after being above 4. I mean it. 2 weeks ago, we were above 4. We have gold this morning, record highs, 2,855, record high every single day this week, I think. Continuing up. Silver, still only at 32.63, up 0.42% though. 34, the all-time recent high, not counting the aberration. Copper, $4.28 this morning, down a little bit, but it's still in range. Dollar mixed. Bitcoin, 105,560, 580, 105,580, up 244. So flattish also. Okay, there you go. One more time. We've got Larry Goldberg, your favorite. He's still your favorite. Now, Jeff Lutz did really, really well on Wednesday night. Huge numbers, but that was the earnings call. So Larry's on later today, and then after that, you got Phil Beisle, which he's phenomenal, has information nobody else has. Very insightful, looking at things differently than any of the other co-hosts. So Phil is probably going to become quite a regular on this channel. And then Robert Scobel, again, nobody on the channel has a richer set of actual on the street reporting data, being in the room when things were happening, being in the room with the top leadership in the Silicon Valley for his entire career, and continuing to do so today. He brings extremely fresh, extremely good data, great information, and analysis. His analysis is outstanding. So he'll be on over the weekend, along with, of course, Brian Wang, who brings us all the science, all the incredible knowledge. And I think I'm able to dig that science out of Brian better than anybody else out there. Brian and we're really on the same page, even though his brain is like twice as big as mine. But anyway, Brian will be on at least once, maybe twice over the weekend. What a lineup, huh? Okay, let's take a look real quick. Oh, and last night, Sir Basher, everybody loves his charts and his graphs and his mind. He's amazing. He's also finding these things, these places to analyze that are different than the rest of us. AJ, next week, okay? AJ won't be on this weekend. I wanted AJ to have time to really think about 25 before we talk about 25 next weekend, okay? That work out? All right. So Sir Basher is the card right up there. Let's take one last look at Tesla before we go away. Still at $414.19. We'll see what happens. For now, that's all I've got. It has been great talking to you.